No, strategy is not being forced to sell Bitcoin. Let me guess. You opened YouTube today, and suddenly every expert with a microphone is warning you that MicroStrategy is this close to having to sell their Bitcoin because price went down a little again. Apparently, a software company with billions in BTC, run by a guy who's been studying money longer than these YouTubers have been alive, is now on the brink of collapse because Bitcoin dipped. Shocking. So today, we're going to calmly, sarcastically, and thoroughly break down why this narrative is absolute nonsense and why Michael Saylor isn't losing sleep. But some YouTubers clearly are. Let's start with the basics, because the internet loves skipping those. MicroStrategy cannot be liquidated like a degen using cross-margin on a casino exchange, even though many creators apparently think that's how corporate finance works. MicroStrategy owns Bitcoin outright, like with no debt on most of it. There's no button where some banker goes, "Oh no, Bitcoin dipped, time to force sell the corporate treasury." That mechanism literally does not exist. But don't tell the influencers. But wait, what about the loans, the collateral, the dreaded margin call? Ah, yes. Let's dive into that, because this is where the clickbait machine completely melts down. MicroStrategy's most famous loan was the Silvergate loan, collateralized by Bitcoin. And do you know what happened to that loan? They paid it off early, in full, with no issue, almost as if they planned ahead. Then they did bond offerings, which are not margin callable ever. When you issue bonds, you don't get forced liquidated because Bitcoin price moves. That's not how bonds work. But apparently, finance isn't a requirement for a YouTube channel. In fact, most of MicroStrategy's debt has zero price-linked triggers. They could literally ride Bitcoin to $1 and still not be forced to sell. But the funniest part, the part everyone misses, MicroStrategy now raises capital without taking on risky debt. They issue stock, like any other public company, and buy Bitcoin with the proceeds. Hardly the actions of a desperate, cornered seller. Let's add some sarcasm here, because clearly the company buying every dip for 4 straight years has been doing so with absolutely no plan, no risk modeling, and no understanding of their own collateral structure. Right? Sure. Makes sense. Meanwhile, what is actually happening? MicroStrategy keeps increasing its Bitcoin stack. In bull markets, in bear markets, during dips, sideways chop, they don't care. They have publicly stated many times that they have no intention to sell Bitcoin ever. And no lender has the authority to make them. Not today, not during a dip, not during a crash, not ever. So why is this rumor everywhere right now? Simple. Because Saylor is fine doesn't get clicks. But forced liquidation incoming definitely does. Let's talk strategy. Because Saylor's whole plan is so detailed, so long-term, and so mathematically structured that the average YouTube pundit can't fit it into a 6-minute panic video. MicroStrategy's strategy is to accumulate Bitcoin using free cash flow, stock issuances, convertible notes, and strategic leverage only when risk is microscopic. Not YOLO leverage at the top, like these creators imagine. Their debt maturities stretch out years into the future, and every time maturity approaches, they simply refinance, raise capital, or pay it off. Textbook corporate treasury management. But here's the thing that YouTube never mentions. MicroStrategy sits on billions in unrealized profit. Even after price drops, they're playing a decades-long game, not a weekly chart game. When you zoom out, MicroStrategy isn't overexposed. They're overprepared. There's a difference. But I guess that part gets left out of the thumbnails. Now let's add some more delicious sarcasm. Because, according to the internet, Michael Saylor, who literally wrote a 500-page internal Bitcoin playbook for Fortune 500 executives, somehow didn't plan for volatility. Yes, volatility in Bitcoin. Who could have possibly predicted such a thing? MicroStrategy knew volatility was coming. They structured everything around volatility. They stress-tested their strategy with volatility. This is not new to them. It's foundational. Their entire thesis is built on the idea that Bitcoin's long-term trend overwhelms short-term noise. And guess what? Historically, they're right. But here's what YouTubers really fear. If MicroStrategy doesn't sell, if Saylor doesn't panic, if no catastrophe happens, they lose the drama that keeps their channels alive. So they keep inventing scenarios, hypotheticals, imaginary liquidation events, emergency sales, none of which exist in any legal document MicroStrategy has ever filed. Let me repeat that more slowly. There is no mechanism that forces MicroStrategy to sell Bitcoin during a dip. None. Zero. It's made-up internet fiction. Even when MicroStrategy takes on BTC-backed loans, they are massively over-collateralized by design, meaning a normal dip does nothing to their position. When the price falls, MicroStrategy simply has more optionality. Add collateral, pay down the loan, or refinance. All normal corporate actions, not doomsday events. And because Saylor anticipates these cycles decades in advance, they always have the liquidity to do it. Not because they're lucky, but because they plan. Remember, this is the same company that bought Bitcoin at multiple price points. $9,000, $30,000, $60,000, $25,000, and everything in between. They've seen every price level, and they keep buying. Meanwhile, the YouTube thumbnails show Saylor crying in a burning office, as if he forgot he's sitting on one of the most successful treasury strategies in modern corporate history. Let's talk about the funniest part of all. MicroStrategy actually benefits when Bitcoin dips. Because they get to buy more with newly issued stock at a discount while retail panics. You know who's actually forced to sell during dips? Leveraged traders on exchanges. Not the CEO of a multi-billion-dollar public company. You know who else sells? YouTubers. They sell fear. And business is booming. The difference is that Saylor is building a monetary fortress, while the YouTube algo builds panic. And people somehow confuse the two. Let's bring it back to reality. MicroStrategy has more access to capital than at any time in its history. This is public information. But again, not very clickable. Every dip makes their long-term strategy stronger, not weaker, because they're accumulating a fixed supply asset, while the rest of the world is still trying to understand it. So no, MicroStrategy is not on the brink. They're not facing liquidation. They're not running out of collateral. These headlines are fiction, wrapped in drama, sprinkled with ignorance. If anything, dips make Saylor smile, because each one is another opportunity to front-run every corporation that still hasn't figured out what's happening. In fact, if they ever announced a forced sell, that would be a bigger surprise than Bitcoin hitting 1 million tomorrow. Because structurally, legally, financially, it's almost impossible. But let the YouTube crowd panic. Let them upload videos with terrifying arrows pointing down. Let them pretend they've uncovered some secret danger. It keeps them busy, and honestly, it's entertaining. Meanwhile, Saylor is doing what he always does, exactly what he said he would do. Buy Bitcoin, hold Bitcoin, and build a corporate strategy around the hardest money the world has ever seen. No drama, no panic, no emergency, just math, patience, and long-term vision. And if someone tells you MicroStrategy is being forced to sell, ask them a simple question. Which debt instrument? Show me the clause. They never can, because it doesn't exist. So the next time the dip hits, and the thumbnails turn red, and the influencers start screaming, just remember, MicroStrategy is fine. More than fine. They're doing exactly what they planned, exactly what they disclosed, and exactly what they told the world repeatedly. And they're doing it with more competence than their critics want to admit. And if you're still worried, just look at Saylor's face in every interview. That is not a man sweating liquidation. That's a man enjoying the show. So no, MicroStrategy isn't selling. They aren't being forced to sell, and they aren't anywhere close. But hey, don't let reality get in the way of a good YouTube panic. After all, someone's got to keep those thumbnails dramatic.